So thank you very much for your patience. Sorry for the tech issues here. I had to switch at the last moment from my desktop to my laptop. Um, Anyways, long story short, Element79, Gold Corp. We've been public since 2021, and we finished one phase of our business, which was focused on portfolio amalgamation and creating value for our investors through an amalgamation strategy to bulk up. We have added further value by basically increasing a resource value from a historical 1.8 million ounces to 3.71 million ounces. And then we completed that sale last summer. That allowed us to clear up our balance sheet. And we have shifted to a new business model, which is production focused, much to follow on the same line. Right as I chimed in, I was hearing your soundbite about resource security, as well as providing production to the actual global marketplace. This is our renewed focus. First and foremost, before I dive into the presentation, I will be making forward-looking statements. This is your standard legalese that you can read through should you choose to go to our website and download the presentation itself. To echo the statement I just made, our goal is to meet global gold and silver demand, delivering shareholder value. We have an increased focus on Peru for the opportunity of resource development. Revenue generation is my main focus. If I were to start another business today, whether it's a lemonade stand, a tech company, or anything of the sort, it's very difficult to run a business without revenue. And I have a lot of respect for junior miners, especially in the exploration space. But it's a very tough business model to follow. So we have rekindled and retooled our business model around being able to generate revenue in the near term. This does involve local workforce development, positive community efforts, and ideally a minimal environmental impact as we do so. We feel ourselves, speaking of the business opportunity, our current market cap is about $4 million. Our balance sheet includes $3 million of shares of other companies, primarily from the sale of that asset, Maverick Springs, that we sold last summer. And we do have a resource exploration project, which is Lucero. I'm going to highlight our efforts on focusing on Lucero, which is 10,800 hectares at the top of a mountain in Arequipa, Peru. Arequipa, Peru is, if I may be so bold, it's kind of like the Texas of Peru. And what I mean for that is that they're very resource focused as a state government. Large number of major projects, including Tex Zafranal, Buenaventura. They have a project called Orcopampa in the region. And this asset used to be a Buenaventura asset. When I talk about exploration, I can identify the fact that, number one, there are 74 veins identified at surface, 67 of which are untouched. And there are attractive high sulfidation targets, which have never been touched with a drill on this project. Now, you can see from the quick math that there are 7 veins that are actually open right now through 3 main portals on the project. And that's where artisanal production is coming from, and ideally where we will be working with the community to ramp up production from those existing portals, as well as opening some new ones on some of the other veins that are available. Now, speaking to near-term revenue potential, there are 1.3 million tons of tailings. They're just dry stacked, sitting on site right now. They've been sitting there for about 20 years. And we have signed a joint venture with the owners of such, so that we can actually get those into production in the initial term. And if we're building a plan to do so, obviously we would like to amplify that, not just to deal with the tailings, but also to be producing anything that comes out of the mine, being the close production node to the mine head, and therefore it makes a lot of sense for local groups to be working with us. Now, as of today, I'm just going to quickly jump into, I'm a finance nerd by background, so I'm going to focus on the corporate finance side as a first step. Just really quickly, our overall cap table, about 30% are founder, institutional, and strategic investors. Management and board own about 16%. Condo Resources, whom we have the option to acquire Lucero from, they own about 3% of the balance, 3% of the balance sheet, and approximately 50% retail in terms of where the share ownership currently is held. Now, We do have, of this 50 odd percent that is owned in-house, everybody has a big picture, long-term vision. We understand what we're creating, and considering our cohort of other companies, and I could highlight everything from Cerro de Pasco to Tinka Resources, Silverex, PPX. A lot of them have share counts into the 250 to 400 million share range. So I would consider it relatively humble given our stage of development and access to being able to generate revenue, much like the rest of that cohort that I've just described. 118 million shares outstanding is actually quite humble. We do have a relatively clean balance sheet. As I said, we sold Maverick Springs last year, and that gave us the opportunity to clean up a lot of our just overburden of debt that we had on the balance sheet, and it did leave us with some capital to move our projects forward up until today. If we are going to be raising capital in the future, equity raises will be focused on operations and drilling and reporting, as well as obviously investor relations. When we look at major project development, whether that is the building of the mill and or any other revenue generating facility, whether that's a tailings or for new ore, we have been in talks with several groups on a global basis, looking at streaming and or royalty type financing, which obviously makes sense if you're able to generate revenue in the near term. To be using those types of capital debt programs. First and foremost, although I've made a quick pass at our physical assets inside the company, I'm a firm believer, and I come from a commercial banking background, as well as I helped operate a mezzanine debt fund for about combined 15 years of my entire career. And through all of the underwriting of a transaction and sourcing capital for projects, more than anything than the actual project itself, I believe the true assets of the company go home in the elevator every night. The team is more important than the asset. If you have a great team and a mediocre asset, you can still end up ahead. If you have a mediocre team and I should say amazing team and a an amazing team and I'm sorry, I'm tripping up with my words here. Amazing team plus poor asset equals still success. Poor team plus amazing access, you can still fall on your face. Apologies for that. What I mean by that specifically, like my background is structuring financing, structuring products, and leading teams to do so. We have an amazing CFO group fronted by or led by Tammy Gillis. She is a fractional use CFO. It's a great way to run a junior mining company in terms of low cost and still having all the horsepower to complete things. More than anything, focusing on the geological side, I spend a lot of time with basically Kim Kirkland. He's our COO. He is a Jerk fellow. He is a QP. And Kim, when I talk about putting things into production, Kim's background is actually, he spent 23 years working in Peru, operating mines. The majority of his career has been spent operating and optimizing mines, 9 years of which was spent operating and optimizing the Antamina polymetallic play, which is a Teck joint venture, as well as he spent another 9 years operating and optimizing and ensuring the ongoing feedstock for a major copper play in Peru called Las Bambas. So fantastic to be able to hook up a gentleman with this level of experience of building, operating, and optimizing mines when it comes to our business model of far smaller scale than anything that he's worked on in the past, but the same mentality, whether it's metallurgy, understanding feedstock, mine planning, and being able to build, operate the machinery that's around. Kim's an absolute major asset to the company. He's definitely part of the in-house brain trust, and definitely look forward to building this company into a producer with his leadership. One of our directors, Neil Pettigrew, he's also a QP, very well known. His day job is with GT Resources as their VP Exploration. He also runs a consultancy out of Thunder Bay, Ontario, called Flatgate. His whole world has been being a PGO and both sourcing as well as developing assets around the planet, primarily in North America and Europe. Fantastic to have him as a guiding light behind us. Zara Kanji is our director who runs the CPA group that obviously backs up all of Tammy's efforts. Very happy to have her help guide with a lot of guidance around everything from compliance to obviously keeping auditors moving. Mr. Warren Levy has built multi-$100 million exits and $1 billion exit in his career. He's an amazing driving force, especially within Latin America. That's where a lot of his focus has been. So while I can speak the language, he makes fun of me saying I speak like a Mexican and he speaks like a Colombian. And at the end of the day, fantastic mentor when it comes to building and operating from zero to very significant cash flowing businesses within the natural resource space. Mr. Antonios Maragakis, he runs a fund today. He was the original CEO of the company that we acquired called Calapui Resources to acquire the Peruvian assets that we had. And now Lucero, obviously the main focus. Tony runs a fund focused on near-term cash flowing mines. He is a mine engineer and a PMP focused on, who's focused his entire career on developing, operating, and optimizing mines. He also has built a consultancy with 55 associates working on it. And they were a key function behind building out the Skouries mine for El Dorado, as well as he helped behind the scenes help develop Skeena Resources from a $20 million market cap company to over $1 billion market cap company through the background controls and operations efforts from his consultancy. So the man definitely knows, in terms of what we're doing, exactly what we're doing, as well as he's a main motivator behind this business model. Mr. Shane Williams is an advisor to our board. He currently runs West Red Lake Gold. And again, he is a mine developer by trade. He and Tony were the ones that built that Skouries mine together, in addition to Skeena Resources. And once again, you're seeing that business model unfold at West Red Lake Gold. And very proud to have those gentlemen as advisors here on our team. Mr. Kevin Arias, last but not least, strategic advisor to the board on the corporate finance side. Kevin has raised over $100 million over the last 7 to 8 years for a variety of mining primarily, as well as oil and gas companies. And again, massive help and motivator to our business plan and how to stoke that fuel with the cash that we need to develop things out. So more than anything, very proud of the team that we've been able to assemble around this business model. And again, this whole business model is primarily focused around Lucero. Lucero is located in Chachas. Chachas is about 270 odd kilometers away from Arequipa City. And again, Arequipa is the resource-focused state within Peru, which I lovingly call the Texas of Peru, given that it has basically everything you could ever shake a stick at, from farming, every form of agriculture, mining. It has its own hydropower. It has open water, ocean access, and it has basically mountains, just like where this mine is located, as high as the Himalaya Plateau. But has an amazing mineral blessing in terms of the endowment that it has. And you do see throughout this map here, you can see all of the other major mines in the general area around us. But more specifically, this is us right here at the Sheila project. Now, in the general region, I was talking about general infrastructure. There are great roads in addition to regional mills. We had signed an agreement with Buenaventura. It seems that they are actually winding down the mill in the general area, similar to us. So this is why we have shifted our focus onto building our own plant to deal with our own product coming out of the mine itself. As I mentioned before, there are 74 epithermal veins identified at the surface on this 10,800 hectares of land. To put that in context, that's 26,000 football fields of contiguous land at the top of a mountain. These veins, in your traditional epithermal fashion, they, effectively millions of years ago, volcanic activity came up, hit a cap, they spread out, the veins run on, and they do ebb and flow and expand and contract at height and at depth, I should say at length throughout the system. So while it is very, as we have seen, very high grade gold, silver, and even getting into some base metals at different altitudes on the mountain, it's a fantastic opportunity to be producing from this. Now, as you can see right now, there's over 16 kilometers of underground working. Some of that was started by Buenaventura when they owned it from 1989 to 2005. But a lot of that has been continued on since that time. That's 20 years of the artisanal miners in the region working these same veins for profit. So in addition to that, as I described before, there is a high sulfidation target identified in the northwest quadrant of the project, which has never been touched with a drill. But every exploratory geologist that has ever visited this, written their master's thesis on this project, etc., for better or for worse, they'll look at it and say, why have you not punched a hole? So there's a great opportunity there, which we could uncover through drilling, ideally this to next year. So just to talk specifically about the opportunity here, the past producing high-grade mine that was a Buenaventura asset, they abandoned it in 2005 only because basically it was uneconomical for them to do so with an all-in sustaining cost upwards of $1,000, and market prices at the time were below $600. It cost them more to produce from this mine than they could actually make in the market. So they just chose to abandon it. At that time, Condo Resources, jumped the claim, took it, and had been really just exploring it themselves, as well as they had done a couple farm outs until Kalapuy Resources picked it up from them, optioned it, and then we bought Kalapuy. During the time that Buenaventura was producing from this mine, its average head grade was 19 grams per ton of gold equivalent. That's significant. A lot of discoveries, happen in the 3 to 5 grams. If you put it in context of the Bald Mountain mine, the Kinross Bald Mountain mine in Nevada, it produces and has been producing for over 30 years at about half a gram per ton. This is 19 grams per ton as a head grade. And a lot of our sampling that we have pulled throughout 2023, we had 2 different field work programs that we carried out there doing channel sampling along the veins, reinforce that. When Buenaventura was producing with that level of head grade, they were producing upwards of 20,000 to 40,000 ounces of gold equivalency per year. So this is a small mine. It's vein chasing, but it's small but mighty. It's very strong in terms of what the grades continue to produce. Obviously, if the artisanals are working there today, and you can see in these photos, these are the artisanal workers doing their work. If they're continuing to produce there, it's obviously very financially fungible. It makes sense for them to do so. Our 2023 assays from pulling samples yielded rates of 11.7 ounces per ton gold and 247 ounces per ton silver, which is, again, it validates the concept of why we're looking at this as our flagship and our main point of focus. Speaking to the tailings, again, Buenaventura created 1.3 million metric tons of tailings. You can see 2 of the piles right here in the center of the photo here. Now, those piles are on the same land where basically the past producing mill was. When Buenaventura abandoned this site, they took that mill and moved over to where Orcopampa is to amplify operations over there. And these are dry stacked. So there is a biomembrane below, as well as a biomembrane on top of these, and then they piled limestone, and then natural grasses over the last 20 years have formed. 2011, 2012 lab tests reflect that these piles, they've only ever been flotation treated, so they've never been touched with chemicals. And basically these are I guess I'll call them the heavies that didn't float out at that time. So they would have to be reground and then basically run through a lixiviation or cyanidation process. 1.5 grams per ton times 1.3 million tons is approximately a 50,000 ounce resource. Now, you couldn't pull that out at the same time, but that does mean over the next approximately 12 to 15 years, this would be a fantastic baseline to create some revenue, create some jobs in the region, deal with the environmental issue of that we'll call it the social harm of seeing these still sitting there. But it's a great baseline to build a business around, number one, and then expand local infrastructure for being able to produce anything that comes out of the mine as well. If you're going to be building the infrastructure to deal with one thing, it's very easy, meaning the tailings, it's very easy to deal with, building the mill on the front side as well, and to be dealing with all of the product. So the negotiations that we have with the group that has the rights to these tailings are that we can retire up to 2.5 million tons of total product in the first phase of this meaning the 1.3 million tons coming out of these piles, as well as additional product coming out of the mine. Our general trajectory, to speak to where we've been through 2024, we did sign the tailings deal, and the gentlemen that run that are very well-known geologists, both on the small and large scale within the university world, as well as the big business world inside Peru. Very happy to have them as strategic teammates and working with us. As we're going through right now, we're finishing off the agreements with the community. So while we have the mineral rights and while we have the permit to be able to produce from this mine, the community around us, excuse me, I have a dry throat. The community around us, basically they control the surface rights. And to the benefit of these approximately 3,300 people in the area, 900 of which are miners working at a number of mines, not just Lucero in the area. They've been open to working with us and trying to carve out a deal, but it's a bit of a slow process, especially right now where it is the rainy season and everybody has basically left town and will not be back until approximately April. December to April every year is a rainy season. And again, we're working with the state to draw everyone to the table to complete these contracts so that we can start work this summer. So approximately based on that business plan, approximately Q2 to Q3 of this year, we intend to be doing at least 1,000 meters of underground drilling at Lucero. And then moving on to, developing on the tailings themselves. Because they're just piles of effectively dirt sitting above or sand sitting above the ground, it's very easy to form a mineral resource estimate and PEA on those. So coming into Q2, Q3, provided we have surface access in Q1 to Q2, that we should be able to form those reports and reinforce those numbers that I talked about, approximately 50,000 ounces of recoverable gold equivalent sitting in those piles coming into that time frame. And then lastly, here we go through Q3 through Q4. You can work up until about December 15th on the project each and every year. Talking about surface drilling to form a mine plan, potentially a mineral resource estimate, even if it's small, on the existing open veins, and then starting bulk sampling, in addition to starting the plant construction on the back of the MRE and PEA for the tailings. Lastly, here we go. In terms of the next steps, I've already described some of those, but just to recap, number one, we're working on the community contracts right now. No activities happening at the mine at this exact point in time anyways, because it's absolutely rained out, which is fine. So we can sit in town and work on contracts, deal with the human aspect of things, and start working on both. The idea is to start working towards the existing veins, as well as uncovering some of the value out of those other 67 veins and potentially the high sulfidation target. Our first goal, as soon as we can gain access to the tailings themselves after the rainy season and contracts being in place, we're going to drill out those tailings to form that mineral resource estimate and PEA that will set us off down the path towards near-term revenue generation. Again, like I've talked about, that planned to work with the tailings themselves. It's a great opportunity to also build the front side to become a local toll processor for any product coming out of this mine, let alone anybody else in the general region on a small scale. In addition with that, to at least 1,000 meters through an underground campaign to give us a greater understanding and form a mine plan about working the veins at a higher pace. Current production from the artisanals is estimated around 20 tons per day. And this mine used to produce at 150 tons per day. So with a little bit more drilling and planning, we should be able to amplify that production, whether directly shoulder to shoulder with the artisanals or independent from them on the existing or new veins.
Perfect. Well, this is we just have to cut here because you're up to your
Sure.
time. It's like now,
yeah, we're right at the end.
We had 3 questions, so let's do very, very quick. I'll ask them. You have
Yes,
5
sir.
seconds. Who owns Lucero, and how significant is the community relationship once finalized?
We own Lucero in terms of the mineral rights. The surface rights are in the hands of the community, and it is significant in terms of being able to carve up that contract. We're only looking at long-term contracts. We're not looking for just campaign by campaign anymore. We intend to be here in the long run.
Perfect. What are the benefits of the Synergy Metals spinout?
Synergy Metals was a project. It was our initial IPO starter kit, and it no longer serves our current trajectory. We were going to be dropping it, so this is a form of recapturing some kind of value for ourselves and our investors.
Clear. Last question. Can you explain the details of the Quishita capital agreement in 10 seconds?
Let's liken it to a life offering through brokers, including all of the costs of commissions and or discounts that would come along with that. And it's basically $5 million Canadian dollars of money that's sitting on the shelf that we can pull off in draws over time to fund our day-to-day expenses, marketing costs, and project development.
Perfect. That's awesome. We went a bit over the time, but it's important to take the questions from the attendees. This is why you're here after all. So James, thank you very much for your time. Thank you. We will be following Element79 Corp, Gold Corp in the near future. And yeah, we wish you best of luck, James. Thank you.
Thank you kindly, Julien.